Just think of a healthcare spending account as your employer handing you $650 in nice crisp bills on April 1st and saying you have until December 31st, 2027 to spend it on health, vision, and dental care expenses for you and your family.
Welcome to 10-5, the official podcast of the OPP Association. I'm your host today, Scott Mills. And for our new listeners, the OPP Association represents more than 10,000 members of the Ontario Provincial Police in Canada. Our members are at the heart of everything we do, and they are our greatest strength. We're dedicated to keeping our members and the public informed about key issues that impact policing across Ontario. And today we welcome the OPP Association's Senior Advisor of Pension and Benefits, Laura Ferron, to educate us on how a healthcare spending account works. So welcome, Laura.
Thanks for having me, Scott.
You are very welcome, Laura. We definitely need your expertise on this, and thanks for all of your work to help our members understand how this new benefit works.
Yeah, it's my pleasure, Scott. It's actually pretty simple if we don't overthink it. I'll try to do my best today to give an overview in simple terms so that everyone can understand.
I like that, Laura. Simple is definitely good. We've been going over a lot of different things amongst the staff here, trying to get this all sorted out. I think we're all starting to grasp it. Now we have to make sure that everybody that's going to use it knows how it all works. So how about this, Laura? How about we start with you giving us an overview about what a healthcare or spending account is, HCSA, I guess it's called.
Yeah, so a healthcare spending account is a top-up account that can be used for eligible medical, dental, and vision care expenses. It helps to offset the expenses that basically cost more than what our regular plan covers. So things that are over the maximum or a copay amount. And it really gives our members the flexibility in how and when the credits are used.
Okay, so when did this actually start for active sworn and civilian members of the Ontario Provincial Police Association?
So it starts on April 1st, and this was a new benefit negotiated at the bargaining table with the employer for all our members. And it's for active sworn and civilian OPPA members.
Okay, that's good to know. We have received a number of inquiries. If retired members, regular part-time members, which we call RPT, and fixed-term contract members, which is referred as FXT internally here, are eligible or not. Can you explain that, Laura?
So the healthcare spending account is for our full-time and our regular part-time members only who are active. And just a note, so our regular part-time members are required to pay a portion of the health and dental premium. So because they need to pay a portion, they're given the option to join the plan or not. And for any of our part-time members who chose not to join the plan, then they are also not able to access the healthcare spending account. Our retired members and fixed-term contract members are not eligible.
That's good to know. I am told by the bargaining team that achieving a healthcare spending account at the bargaining table this round was kind of like a foot in the door to expand the value of having a healthcare spending account moving forward. So that kind of brings me to the next question I have for you, Laura. How much are eligible members receiving? And in simple terms, what does that mean?
So every year, members will be given an allocation. It started, as we said, on April 1st. So on April 1st, 2026, each eligible member was given a $650 allocation, or credit, as we like to say. And next year, on January 1, 2027, each member will receive a new allocation of $800. And in 2028, January 1st, members will receive $1,000 credit. And that's where our round of negotiations ended. But at this point, it's that we have our 3 years here. So what that really means is that members have extra money to use on their health, dental, and vision care expenses.
We've also got some inquiries, Laura, about carry forward of this. What if you don't use that money in the first year, for instance?
The balance has to be used by December 31st of the following year, or you lose it. For instance, members receive $650 April 1st, 2026, and they have until December 31st, 2027 to spend it. The allocation given January 2027 must be used by December 31st, 2028. So basically, this means that members can choose to skip smaller claiming amounts in the year, and then they can have 2 years worth of an allocation in order to spend that in the second year if they want. So to break this down, a member could receive $650 April 1st, 2026. Then they have until December 2027 to spend it. And in the middle of that time, on January 1st, 2027, the member receives a new allocation of $800. So if the member did not claim against the healthcare spending account in 2026, as of January 1, 2027, they would have $1,450 in their account, which is a $650 plus the $800 that they could spend. And this could come in handy if they wanted to pay for larger expenses that are not covered by the regular plan. For example, if they wanted to get braces that aren't fully covered by the plan.
That makes a lot of sense. So, who under the plan can use this money? I know we had some questions about: is it just for the member? Is it every person that's on as a dependent on the base plan? How does that work?
So the healthcare spending account uses the CRA definition of a dependent. So claims can be submitted for the member, of course, for their spouse or partner, and their children. But in addition to that, if a member can claim the medical expense tax credit for someone in their household, they could also be eligible. So there's some situations where people claim medical expenses for an additional dependent, for example, a grandmother who may be dependent upon them for support, and they claim that person on their income tax. In most cases, this person would be eligible. And in most cases, the members who are doing this would be familiar with this concept, but members can always speak with their accountant for more clarity if they think that they may have something that fits this scenario.
And so we should really be looking to kind of the Canada Revenue Agency's website for the exact qualifications of all this. So we're going to put a link to that in the show notes for everybody's information.
That's
And
great.
in summary, I'm just trying to get this down. Generally, eligible dependent children listed on your base regular plan can use the healthcare spending account. However, it also can extend to a parent or grandparent or other relation if the member is claiming them as a dependent on their income tax return. Is that fair in layman's language?
You've got it. You've got it. So if your children, for example, are the ones who are covered on the plan, then they're automatically the ones there that can be covered through the healthcare spending account. And if somebody has an additional dependent for whom they can claim that medical expense credit, then yes, they would be eligible. You've got it.
Yeah, I really encourage people to check out what the Canada Revenue Agency says about all this, because it does open up a few doors and probably opens up a few questions too. So you can always send those questions into us by email at communications@oppa.ca, and we'll get in touch with Laura to get the expert opinion on that for you. So, Laura, what expenses are covered? What can we use this for?
So again, this is the eligible expenses are also defined by CRA. So you can top up the coverage on anything that the regular plan was covered. So as a general rule, if it's covered under the regular plan, but just not fully, you can claim the unpaid balance against your healthcare spending account. But there are also other expenses that are eligible, and members can check the CRA website. Again, you mentioned that the link will be in the show notes, and they can use that as a guide to understand what is covered. It'll be things like prescription drugs, dental services, vision care, your paramedical services, and paramedical is like your massage, chiro, those types of things, as well as the medical supplies and specialized equipment. Just remember that these expenses are for health maintenance or improvement.
Good to know. I'm still kind of thinking out loud here. Can you claim something like a gym membership or like an Apple Watch or something like that, for instance, on the healthcare spending account?
So the healthcare spending account is a tax-free benefit, except in Quebec because they have slightly different rules. And in order to maintain that status of tax-free, again, it has to adhere to CRA. And this is not a wellness account for preventative items. So no, a gym membership or an Apple Watch would not be eligible under a healthcare spending account. And I should mention also that a healthcare spending account cannot cover things that are eligible under a provincial plan, such as OHIP. So, an example of that would be hormone replacement therapy, since that's something that comes up quite a bit these days. And if someone is doing this therapy, the doctors are constantly monitoring their patients through regular blood tests. And these tests are mostly covered by OHIP. However, these clinics do often offer these tests in their private labs, and it's convenient, it's comfortable for the patient. But just know that since these tests are eligible through OHIP, they're not eligible through the plan or through the healthcare spending account. So members always have the choice of where to go and which provider to choose, but they really need to do their homework in making sure that they choose what's right for them.
That's really good information to have. We were talking about this, Laura, yesterday, Laura. Some companies they're using doctors and it's all covered by OHIP, and some aren't, and it wouldn't be or a nurse practitioner type thing. So just be mindful of that. This is really informative, Laura. I've kind of got one last question, but I'll probably have more. How do you actually make a claim on the healthcare spending account? Because right now with our base plan, there's an app. You can do paper submissions if you want. I use the app. I think it's great, but how is that going to change with the healthcare spending account, for instance?
Oh, that's a great question. I mean, that's what everybody needs to know is how to claim, right? So yes, the healthcare spending account cannot be used at the point of purchase. So it has to be requested. The member has to advise that they want their balances to be paid. Sorry, they want their expenses to be paid against their balance. And it's not automatic because it's a very flexible account and members can choose when and how they want to use it. So for example, if a member goes to the pharmacy, they would put the claim through their system, and it's no different to whatever they were doing before April 1st. So at your point of purchase, no difference. And then it's just the second part, which is if a member wanted to submit an unpaid amount to their healthcare spending account, they could do that, and they could do that through the online system. You mentioned the app. That's the fastest way to do it. You can also do it through the browser using My Canada Life at Work. And the slowest form, which someone may still want to use, is a paper claim form. So you can do it that way. It is easiest to do online because you can follow all the prompts. It asks you the right questions. You can make sure that you've got all the information that you need. And we do have some scenarios posted on our website as well, if members are interested in that.
Well, that's good information as well. Right now, I'm just thinking about going to the pharmacy and having coordination of benefits with my spouse and stuff like that. So can you explain how coordination of benefits work if you're on more than one base plan?
Sure, I'd be happy to. So, coordination of benefits, for those who don't know, is a process that's used when a person is covered by more than one health or dental plan. And the purpose is to ensure that the plans work together to pay claims, allowing for a maximized coverage. So, in your case, as you were talking about coverage with a spouse, if your spouse has coverage through another carrier, a member would submit the claim to their own plan first. And every time an insurance company reviews a claim, they produce something that's called an explanation of benefits sheet. And it just breaks down how they paid the claim. So a member would submit it to their own plan first. They would receive an explanation of benefits sheet. The spouse rather, would then submit the claim to their own plan with a copy of the explanation of benefits. And then still, if there's any unpaid amounts, then the member can submit that to their healthcare spending account along with both explanation of benefits sheets explaining what was paid by both carriers, and the remaining balance could then be paid through the HSA as long as it's eligible.
Okay, that sounds good. I don't know if it's worth saying here as well, like the coordination of benefits for the base plans, like how that works, like is who goes first? Like the order is a big thing, right?
Yeah, so it's members always need to go through their own plan first and then through their second plan, which is typically the spouse plan. So it's nothing changes in the order. It's always member plan first, spouse plan second, and now we're adding the third layer, which is healthcare spending account. I should mention that if there are any couples, so member and spouse are both members of the OPPA, then the coordination of benefits between the member and the spouse can be done in one submission when you use the online submission. So it's a little bit easier there. So the same order is followed: the member, the spouse, the member's HSA, and then the spouse HSA. But it's just a little bit easier because they don't have to submit more than once. They can do everything through the plan when they do it online.
Perfect. I already told you that was the last question I was going to ask you, and I lied. I'm now thinking there's submission cutoff dates for the base plan and stuff like that. I'm going to leave you to explain it here, but I think it's different for the healthcare spending account. Am I correct there?
You're right. So our plans actually have extended submission dates for both the health and dental and the healthcare spending account. So the key is healthcare spending account claims need to be submitted by May 31st of the year following the date of the claim. So stories make it real. So I'll give an example. If I visit the dentist in June of 2026, I have until May 31, 2027 to submit the claim. And this is earlier than the deadline of December 31st for the base plan. And these dates can be very confusing. So I would just say the best way to avoid missing a deadline is to submit expenses as they're incurred. And if you want to use your healthcare spending account, just keep the May 31st date in your mind as the deadline.
I am going to mark that date in my calendar right now. Because that's quite a chunk of money that you're getting, and it's going to take some coordination probably on your personal side to figure out what that might be beneficial. I think we may have covered off the vast majority of it now. I don't think we'll ever have covered it all off.
No.
Do you have a kind of a simple, memorable line about the healthcare spending account, Laura, that you could end this off with so we all kind of understand it?
I think I would say, I don't know if it's one line, but I think I would say, just think of a healthcare spending account as your employer handing you $650 in nice, crisp bills on April 1st and saying you have until December 31st, 2027 to spend it on health, vision, and dental care expenses for you and your family. And of course, I always want to remind members to check that the expenses and their additional dependents are eligible to avoid any surprises. Overall, this healthcare spending account is a great enhancement to our current benefit package. And I really hope that this explanation in the podcast has been helpful to our members.
I think you've covered a lot of it, and it is starting to make sense even to me. So, so in addition to the links that we've discussed that we're going to put in the show notes, there's information posted on the benefits section of oppa.ca on the member side. And so if you require a login for that and you're a member, please email our reception, which is oppa at oppa.ca. Lexi and Don will be happy to get you set up. With that, any last words, Laura?
Scott, thanks so much for the opportunity to support our members and explain the healthcare spending account on this podcast. And of course, thanks to our entire benefits team and communications team, and of course the board, for all the work that's been put into achieving this additional benefit and implementing. It's definitely been a lot of work, but we do work for our members, and we believe that it will be very worthwhile to all of our eligible members.
Well, thank you very much, Laura. We appreciate your expertise and all the hard work that has gone into this. Hopefully we'll get you back on again. I know this is the second time you've been on, but there's always lots of things to talk about in the benefit world. So
True.
we appreciate your time.
Thank you.
You have been listening to the OPP Association's Senior Advisor of Pension and Benefits, Laura Ferron. And she's been educating us on how a healthcare spending account works here on 10.5, the official podcast of the OPP Association. If you like what you hear, please hit subscribe on the podcast platform of your choice so you never miss an episode. New episodes are currently being released on a Friday monthly. And if you have any questions or have ideas for future episodes, please feel free to email us at communications@oppa.ca. Until next time, thanks for listening and stay safe.